The market's downturn causes and smart strategies to react. Hello, everybody. Welcome to today's Trade Smart Tuesday. We're going to be talking about the market's downturn. I've been seeing a lot of narratives out there, how we are in the midst of the perfect storm with so many elements coming together all at the same time. We're going to walk through those elements. Dennis Wilborn and I spoke about them a little bit yesterday on the Trading Truths podcast, but I'm going to dive into some of the ways that I've been handling this and some of the ways that we touched on briefly during yesterday's show, but I want to dig into those a bit more. So before we get started, let me know where you're at, where you're from, and type into the chat. Let us know, and we'll hop into the charts. Caleb, welcome. All right, we've got Caleb in the house. We've got a bunch of other people hopping on over from X. Let's jump into the charts, jump into the presentation. All righty, here it is. So, market's downturn. Causes and smart strategies to react. Navigating the perfect storm with smart market moves. All righty. So, our objective here, as always, is to cut through the noise. And we want to do that by focusing on actions, not just words. So, the way that we could do this is really by watching the market's behavior and making the informed decisions based on the market's behavior, not just by some of what's being said in the market. But there is a lot that's being said right now. Here is what is being said about this perfect storm. Number one, there is high unemployment. Number two, there are high interest rates. Number three, there's inflation. Four, recession fears. And five, to top things off, the cherry on top is we have a presidential election. You take all those things, you wrap them up into one big ball, and what do we have? You have a whole lot of reason for uncertainty. And we know that the market doesn't like uncertainty. So what does that mean? What should we be doing? Well, in the last couple of days, the recent market moves have been the S&P declining as much as 8% in 3 days. The NASDAQ declining approximately 12% in 3 days. And today, what happened? Prices rebound. So my question to you is, were you caught off guard by any of this, or did you see it coming? What headlines have you seen? How are you positioned? And let's take a look briefly at the charts, because I think that the charts are going to be fairly telling here, right? Here's a look at the NASDAQ. And my question to you is, what changed? What changed? Right? Well, we had all these elements, right? Well, we had unemployment, high interest rates, inflation, recession fears, presidential election. What happened? Which one of those was different in May? And which ones of those were different in July? And then what was different the last couple of days? And what caused this rally? Right. Well, when you think about it, when you start to think about all the different headlines that are out there, well, what are some of the big differences? Personally, not a whole lot has changed, right? Caleb, you're spot on. Nothing has changed. Nothing at all has changed. So, what should we be listening to? Right? If nothing's changed, if we're still looking at the same stuff here, and nothing has changed, then well, what's the point? What's the point of dialing into the news and being twisted and turned around? Are are the major players? Do you think the major players are thinking that way? Right, the people that are moving the markets. Do you think that they are paying close attention to all these things? Well, maybe they are, maybe they're not. But I think that one of the things that we could do that'll help us is to listen less to the media and watch more. Here is why actions speak louder than words. We started to see it over here on the Nasdaq. Here's how it looks over on the S&P 500. Right, well, what happened here? What happened was you had the steep drop of 8% out of nowhere, and you start to have people saying that there's this perfect storm happening. But was it really the perfect storm, or could you have seen this coming based on looking at people's actions? I don't think that there was a whole lot that changed so much midday yesterday to today. Do you? Type into the chat if maybe you know something more than I do, but type into the chat if there's some sort of major catalyst that would have changed things from what we saw just a couple of slides ago, right? From back here, right? Did one of these or a couple of those get resolved that would lead to bounces like what we're seeing here in the S&P, or switch over to the Qs, or maybe over here in Nvidia, right? That might look like a small rally, but off the lows, that's at one point was about 20% on the day. So you tell me, well, what changed? As far as I can tell, and I've haven't been doing this for that long, only a few years, 25 years to be precise. If the thing that strikes me is that the one thing that changes day to day in a major way is the amount of risk to reward. The risk to reward relationship changes day to day. So if prices are falling, how much risk is there to get in on Nvidia at say $90? Well, the way to figure out how much risk there is to get in on Nvidia at about $90 is to look to the left of the chart and see where is support. Well, guess what? It was sitting right at prior resistance, these prior highs. In fact, I had a trade in Nvidia right back here back in May. And where did price fall to? Well, lo and behold, it was right to where it broke out back then. So if you wanted to risk just 3%, you had this nice upside reversal. But let's not just poke at Nvidia. How about the Qs? How about the Qs? Well, what happened with the Qs? So the Qs hit the 200-day moving average. They reversed as well. And if you take a look to the left of this chart, where was the price action? Right? That dotted line goes right over here. What's that? That's the May lows, right around the May lows. So what's happening is that as price sharply spikes down, what causes it to come back up is the difference between reward and risk. Risk is getting smaller and smaller and smaller to test these longer term levels. So people are willing to step in and buy off of those levels because the risk is small. We're all looking for that asymmetric reward to risk. Nobody wants to have their risk be a lot and their reward be a lot, right? Like that. That's uh, basically playing. I don't know. You're trying to play the lottery, right? You don't have very good odds with that. Well, what you need is small risk, high reward, and what you have here was that. Now, with just about 1% of risk when price opened yesterday, and you're playing versus May's lows, what people were able to do was step in, buy at those levels, and if you're playing for a short-term rally, right, 4.5%, that gave you 5 times your risk. That's why people were stepping in and buying aggressively yesterday, and were following through some today, right? But now I ask you the opposite question, right? Well, or think about it this way: where is the risk to reward relationship now? You're looking at the cues. Where is it now? Well, right now you're kind of sandwiched, right? Right now you're stuck between the 200-day moving average and the 100 EMA, or prior chart highs right there. So now things are starting to get a little out of whack, right? So if you're an investor, you're a trader, and you're trying to find, well, where is there small amounts of risk and high amounts of reward? This isn't it anymore. Right now, you're caught in the middle, so you need to wait for things to level off. Do you agree with this? Let me know. What do you think? Caleb says that there's a 50% retracement from low to high. Came back up after the meeting. That could mark maybe, right? But part of that, I think, prices will do what prices will do, right? Maybe some people think that, oh, there's a meeting, somebody said something that was positive, so prices are rallying. Let's wait for the next meeting and see what comes out and trade based off of that. All that is all well and good. I think that if we listen less and watch more, we can take the appropriate action. And here's why. On this day here, let's go back over to the, yeah, well, I guess we could use the S&P 500. So for most of this, I'm mostly cash, right? I had one trade on this trade, BTSG, and I actually sold this one right ahead of earnings, right? And I'm not telling you this to toot my own horn or anything, but toot toot. Anyway, I joke. But so I'm buying here as prices breaking out of this pattern. I'm selling here. That's Wednesday, right? Secured 4% profit. I avoided this mess. But also at the same time, we come over to, yeah, let's go over to this one here. I'm selling everything here. Now, why sell there? Why sell there? Is it because of a meeting? No, it had absolutely nothing to do with a meeting. It had everything to do with being able to see what's happening in real time and make a decision, not waiting for some sort of minutes to happen or some sort of meeting or some sort of announcement or any of that stuff. It's seeing how people are reacting in real time, because if I'm trying to interpret not what a meeting is, and oh, this is good for the economy, this is bad for the economy, this is good for the market, that's bad for the market, then I'm allowing my own biases to enter into the fray. But if I'm watching what the reactions are, then I get what the market's opinion is. And if I understand what the market's opinion is, that's what allows me to move to cash and avoid this 8% drop. Allows me to avoid this 12% drop. And if I'm able to better assess reward to risk, then that's one of the things that can allow us to pick some of these bottoms or find the areas where maybe, just maybe, the reward dramatically outweighs the risk. Thoughts on that? Thoughts on that while I get the next slide queued up. We just spoke about reward and risk and the power of price action. Um, so let's talk about simplifying price action analysis. You need to understand basic support and resistance. Just think of it as a floor and a ceiling. Longer term levels are stronger. The stocks are the nuts and bolts holding everything together, right? So you have your major indexes. We were looking at the S&P, we were looking at the Nasdaq. Picture those as a house. The stocks within them are the nuts and bolts that are holding the house together, right? So if you get a picture like this, this house is on the left is okay. This is your standard average market. Then on the right, you start to have everything falling apart, right? The indexes are falling apart. They're falling apart across time frames. The stocks within them are having problems. That was what happened last week. That's basically what happened over here on Thursday. Right? You were basically being held together by glue, and then all of a sudden, now we look back like this house here. Not too good. Not too good. So how can you go about finding out the nuts and bolts that are all holding together the market, right? Because I think that that's the real important thing for us to be able to do. That's the thing that's going to be able to give you a an objective way to view markets. Because if you're waiting for meeting notes and you're waiting to see, well, what are the employment numbers and trying to become an economist, unless if you have some sort of advanced degree, you know, there's easier ways to figure out which way the market is leaning, right? Just look at the action itself. So here's how you can do it. Here's how you can do it, right? So we mentioned this earlier. There was this real life example that happened on Thursday. The market was on shaky ground, stocks cracked early, and that prompted me to exit everything at 10:55 a.m. Eastern. So how and why? How and why? Let's pull up this spreadsheet. So at 11:55, right, or heading into that day, there's a few things that I track every day. One of the things is the number of stocks that are setting up and how the market is treating those stocks. If you're looking at stocks that are consolidating, and the stocks that are consolidating are doing well, then the market is going to do well. If you're looking at stocks that are setting up and the market starts beating them up, and you start seeing that, whoa, there's not a whole lot of quality, then you're in an environment where the market is likely to get shellacked. And that's kind of what happened. The market will tell us what to do. Caleb says, I didn't get in today. I didn't feel comfortable getting in tomorrow. That's about the time I got out, but mine was more luck. I would be curious if it's luck or if it's a matter of figuring out what it is that you're doing, because there will be at some points, right? Like you might say that I was lucky to exit here too, right? So in this group chat that I run on Discord, uh, I posted a message that said that, you know, normally I don't exit in the middle of the day. Most of the time I make my decisions at the end of the day, but I'm exiting now. And here's the reasons why. And the reason why was basically everything was a sea of red. And it was different than other down days, because we'll have down days where most stocks are red, but it was different here. And the reason why it was different there was because you're leading into this kind of action, right? So you have the Nasdaq here. Price fell a couple of times here, and you see how price is consolidating or moving sideways just below that red line there. That's acting like the ceiling, right? So price is hitting its head on that ceiling. It attempts to pop its head above, and then all of a sudden, whammo, it fails, right? So if it fails, then that's an early warning sign. Hey, you know what? Market tried to break out. It's not working. Just exit. And the only way that you're going to prevent yourself from having a big loss is by taking that smaller loss. A lot of people are afraid to do that. A lot of people are afraid to take the small loss, or maybe they're not afraid. It's that they don't want to take a small loss because they're worried that, oh, price will turn around and then I'll have egg on my face, right? Because if I sell, if I take that small loss and price rallies, then I'm going to have to buy it back higher. I'm going to lose out on that profit that I would have had. I'm just going to hold on and wait it out. Well, every now and again that works. And when it doesn't, you get caught in something like this. And the problem is that it only takes getting caught like this a handful of times and then you're knocked out. Uh, Caleb says, I was in NVIDIA and TQQQ and decided to get out instead of hoping for a bounce, but it moved so fast. I thought I can buy back later. I'm getting out so I don't have to stress over it. Yeah, so if you're getting out over here, you're still up significantly from where you would have been otherwise. The only difference is if you're trying to pick a bottom, right? And so a lot of people look at this and say, "Oh man, like I just want to get in it." And if you're able to get in on these low risk spots, right, where reward dramatically outweighs risk, sometimes you'll get those. And if you're Johnny on the spot, you'll be able to catch them, and that's wonderful. But if you're not, that's okay too, right? Here's the key. Here's the real kicker. What you need to have is a list of how you're going to operate. You need your operating manual, and then you need to follow that. And that's going to remove a lot of the stress, a lot of the anguish, and it's going to be how you're going to be able to make consistent profits in the market. Period. Yeah, Caleb, yeah, save so much money by being out and not trying to, catch this reversal over here. Yeah, even from exiting, let's say I have no idea where you exited, but even if you exited uh, right at the close on Thursday, you're still ahead of where you were, and you didn't have to sit through another. What kind of drop was that? Another 17% drop. Let's let's go back to the slides. Sorry there, folks, a technical glitch. We'll get it back up. Don't worry. Let's see, where is the slide deck? There's that. Now, where is the slide deck? There's a slide deck. All right, back in business. So buying back on Monday, we talked about that a little bit. The next step that you guys need to start thinking about is writing your trading business plan. Your trading business plan is going to be the thing that allows you to figure out what trades you're going to take, what elements of the market you're going to analyze, what you're going to consider, and whatever makes it into your business plan, that's what you're going to trade. And that's really it. And so that is the end of that. Yeah, that slide did not turn out as well as I had hoped. So let's do the Q&A. Let's do the Q&A while I fix this slide here. Caleb says that he exited at about 10:30 a.m. on Thursday. That's good. So you missed that big drop. You missed. Yeah, you missed the bulk of this. So you probably saved yourself 20%, which is excellent. All right. This is fixed. Thanks for sticking around and being patient. So here's what you need. You need to have a business plan. You need to have a business plan for your trading. You A lot of people will have a trading plan, right? A plan for their trades. A plan for your trades is excellent. That's an important part to have. But what you need more than a trading plan is a business plan for your trading. What's the difference? The difference is that a trading plan is going to tell you where to enter, where to exit, how much to risk. And it basically stops there and you make a trading plan for each trade that you're going to take. You do need that. But the thing that's going to tell you what setups you're going to trade, what's going to factor into your analysis, how much you're going to risk, when you're going to place your trades, what brokers you're going to use, uh, your emergency plans for your trading, all that gets baked into your trading business plan. If you were running a business, these are all the different things that you would need to run a business. So, in order to trade well, in order to trade successfully, in order to trade successfully over the longer term, what what you need is a business plan for your trading. That's why I wrote this book, The Trading Success Blueprint, The Ultimate Guide to Crafting Your Trading Business Plan for Profit. It's it walks you step by step on how to write a business plan. And you don't need to be an MBA, you don't need to have a business degree in order to write a plan. Most of this stuff might even be in your head already, but the problem for most people is that it stays in their head. They don't take the time to write it all out. And for that reason, when you get days like we had on Thursday and Friday, and then you get this crazy upside reversal yesterday, that's where people are all over the place and taking random trades. It's because they don't have a trading business plan. They have a trading hobby. And when you have a trading hobby, you're dialed into the meeting notes and the news and all these different things. You have loads and loads of data, but it's not structured. So you need structure, and this will help you get that structure. So go grab the Trading Success Blueprint. I will post the link to it into the chat. There's the link. So go grab yourself a copy of the Trading Success Blueprint. Alrighty. And that's it for that. So let me know what questions you guys have. We have a few more minutes here. Got a lot of people watching. We've got about 100 or so people watching over on X, a few people watching over on YouTube. We've got Facebook in the house. What questions do you guys have? We could go through the rest of the presentation, or if you have questions about what we just spoke about, put that into the chat. If you have other questions, we'll take a few general questions as well. There's the book again. What do I think about the market right now? Right now, let's see. Well, let's go through this step by step. Right, we'll walk through at least some of the steps that I would normally take. So one of the first steps that I do is to see what are the trends on each of the indexes across time frames. So that's going to tell me how strong each of the floors are. Right. So if I'm looking at a daily chart, that's the lowest time frame that I'm looking at on the indexes. Then I'll take a look at weeklies. Then I'll take a look at monthlies. If price is sitting at a monthly level, then that's as strong as it's going to be, right? If we take a look at some of these monthly charts, they're still okay. I wouldn't consider any of these to be broken. The Russell is in a little bit of trouble, but I wouldn't consider any of these to be in downtrends, right? The S&P 500 is still above its 12-month moving average. The Nasdaq just it touched and then rebounded from its 12-month moving average. Russell's trading sideways, the NYSE's trading sideways, the Dow is trading sideways. It's all good, right? From that longer term monthly perspective, it's all good. And who uses the monthly time frames, right? Your long-term players use them. Your major institutions, your major players are using monthly charts. So if you take a look at a monthly chart and you see that price is starting to get to monthly support levels, then that's a spot where they might step in and add a little bit to their positions because they can't move in and out like you and I can. And we all want to get the best price. So there's that part of it. But where are we at right now? Right? We mentioned earlier that the low risk, high reward trade, that was yesterday. When prices spiked lower, that's when the low risk, high reward trade was there. Those trades are gone. I went through and ran my screens. I have a whole bunch of screens that I run in this uh, screener called Deep View. Right now, well, let's pop over to Deep View. I'll share that with you guys. Right, so here's Deep View. I run a couple of different screens in here. This thing is pretty cool. Well, one of the things that it lets you do is you could have your different watch lists, and then you could have a whole bunch of these different columns. And I have these columns sorted where I could see which stocks have relative strengths at new highs, which ones are showing 3 weeks tight, which ones are having volume drying up, which ones are showing pocket pivots, which ones have that oops reversal. It's basically an upside reversal. And I have my list sorted in this way so that way I could see, okay, here's all the stocks that I'm interested in. And of the stocks that I'm interested in, right, my universe list, there are 100 names right now that are setting up in some kind of a pattern. So I'll quickly look through the charts of all of them. And what I found was that out of that 100, only 7 of them were semi decent for tomorrow. And I personally am not interested in trading any of these for tomorrow. But doing this exercise gives me a tangible feel of the market. Because remember the analogy with the house? Right, well, let's bring that house back up. I really like that house. Right, so your house on the left. If we're talking about the market, that house on the left, the indexes are looking good. You're in a steady uptrend. You're not too volatile, not where you're all over the place and choppy like we've been. You have stocks setting up. You have stocks setting up constructively. But what we have now, barely any setups. The setups that I'm finding look like that house on the right. And the indexes are a bit all over the place too. So what does that tell me? Sit on my hands, wait. And that's basically it. So one last shot for questions. Any other questions? For those of you that are not already on our newsletter, make sure that you get on our newsletter. We have a free newsletter that goes about a few times a week. You could get it over at marawealth.com/newsletter. And make sure that you go over there and sign up. Also, make sure that you like and subscribe wherever you happen to be watching. Thank you for watching. I appreciate you guys. I want this show to be as helpful to you as it possibly can be. So get your questions in, reach out to me, let me know what kinds of topics that you're most interested in. I'm doing my best to figure out what's the hot topics of the day and giving you my 2 cents to see, well, how is this guy handling things at his perspective. So let me know. Send the questions in. I want to hear from you guys. But until next time, I want to say thank you all so much for being here with me today. Appreciate it. And until next time, take care. Much love and God bless.